if I'm allowed to begin with a bit of an understatement, it's been an uncomfortable year for the tech sector so far. But I suppose you're looking not just at kind of share price movements, but of course at the operational performance of companies you hold, companies within the sector and subsectors. So I think to start off, it'd be interesting to get your thoughts on perhaps parts of the space that perhaps you've seen particular pain when it comes to the operational performance. And then have you yet begun to see any pockets of resilience, any kind of notes of reassurance?
Sure. Great question. I mean, maybe just to start off, we operate the trust with the mantra that technology creates long-term competitive advantages for industries. And we're bottoms-up investors with a macro overview. So with that as a backdrop, if I take a look at the year thus far, clearly, inflation has been a big worry on tech. If I drill down in the portfolio, what we've seen is, on the software side of things, we've actually seen good results. I mean, these companies continue to grow, albeit at a slower rate than they did last year. And I think that this market in general, or for software stocks, I think that there's a decent amount of discrepancy. Whereas in the back half of the back half of 20, you could have owned the industry broadly speaking, and you would have done just fine. So I think you're seeing some dispersion within the group, which I think is a good thing. Companies that are focused on things like cybersecurity, digital transformation, management of the cloud, etc. Those companies are doing well and they're growing healthily. A lot of them are still investing in their businesses, albeit at a more gradual space. So that's a sector that we like. If I move over, and think about semiconductors, between general semiconductors and specialized, we are more attracted to the specialized semiconductors at this point. Having said that, there's a lot of bad news in the broad-based semis. We have seen companies start to kind of look at their inventories and kind of figure out what to do with them. So that is part of the healing process, albeit a painful one. And then, so that's an industry look. At the end of the day, we continue to think semiconductors, specifically on the specialized side, it's just a good place to be over time. We're underweight them right now due to some of the cyclical nature of them. But longer term, if we just think about the amount of content going in various things, that continues to increase. That's not a new trend. That's a trend that's been around for a while. And then if you just think about some, secular themes that are happening global, look, I think that there is an awareness across the globe about the environment. And if you think about things like electronic vehicles and, more and more, traditionally maybe petroleum powered things like power equipment moving to battery, like that's an interesting space. And then just on the ESG side of things, there are companies now in the software space that are really focusing on helping industrial companies capture their ESG footprint, primarily, obviously, on the environmental side. So I guess on the E side of the ESG footprint. So, look, it's been a tough year. Companies have definitely having to do things differently. Having said that, we are finding opportunities, albeit the set of opportunities is a smaller one than we experienced a year ago.
And in this kind of environment, what kind of metrics would you be? I imagine perhaps it differs from subsectors.
It does differ from subsectors.
What do you look for kind of reassurance or?
Sure. I mean, at the end of the day, we're only interested in businesses that can be profitable and have good business models. I'm not interested in profitless prosperity. I never have. I've been doing this for 20 years. I always tell myself just because a company's public doesn't mean it's a good business. And I remind myself of that on a daily basis. So, we look for businesses that we think have, sustainable competitive advantage, a gross margin structure that lends itself to a robust operating margin structure over time, and with the understanding that a lot of these models are subscription models where you're incurring the costs up front and you're recognizing a sliver of revenue over time. And I apologize, I'm a little under the weather, so bear with me just with my voice. But that hasn't changed for us. It's something, at the end of the day, if a business is going to be a good stock, it needs to have cash flow generation at scale to attract the rest of the people on this call. So that's something that we're focused on. And it's something that companies have varying degrees of success depending on their maturation curve. So that tends to be the way we operate under.